I love this part. Yep, that's the one. What's up, fuckers? Let's jump right to the video. I already wasted enough time. So we're going to start with SPY, which is very, very bullish. Checking off the final landmark today, the symmetrical landmark 410 and change. Actually poked through a little bit. I'm just going to start over with the symmetry again. So we'll start with the blue box, which is the middle. Lowest low, one break above the trend here at 418. Coming into the red box on both sides now, where you break below the trend at 380 on both sides. Up to 418 on the dot on both sides where you reject, down to 380 on the dot on both sides where you find a bounce, up to 460, and then the pullback from 460. Coming down first to this trend at 418 where you bounce off to the yellow box, and then you fall down to 410. And again, running this trend line straight across, coming down here to 418, found a bounce up to this yellow box, and then you fall down to 410. Now, we did come a little bit lower on this side. I believe we touched 409 today, but closed above the trend. This looks amazing, absolutely perfect. The symmetrical landmarks have been a little bit off. For example, this top here at 460, this top was a little bit lower than the previous over here. The cup and handle was a little bit lower, slightly lower than this, the cup and handle on this side. And now the 410 landmark over here is slightly lower than the one over here. That being said, the bottom is now in on SPY, and I'm fully expecting upside. We're now looking for a move to 450. Should be pretty volatile. We should get up there relatively quick. And then potentially pulling back to 420 one more time before all-time highs. It's possible we just go right to all-time highs. I have to lean. We're going to come up to 450 first, pull back, and then go, just because, you know, this has really, really played out perfectly symmetrically. I've been tracking this since the beginning of the year, March 2023. This looks amazing. So that's that. I showed this yesterday as well. This is the side-by-side SPY's macro from all-time highs, the downtrend, versus the downtrend from 460. Again, what we're looking at here is the downtrend from all-time highs to this point compared to the downtrend from 460 to this point here, side-by-side now. So looking at this, all-time highs on SPY coming down to this yellow circle here, bounce up to the green. 460 side now coming down to the yellow circle, bounce up to the green. More downtrend to the green circle, more downtrend to the green circle. Bounce up, reject, bounce up, reject, that red arrow. Come down, this is where you're drawing that horizontal line across on both sides. Find a bounce up into the red box, slightly higher than this on both sides. And then more downtrend, breaking slightly below that horizontal trend on both sides before you reclaim, and then you fall through and you kind of knife through there. That's it. This is SPY's macro. The downtrend macro of SPY has now completed, finished playing out, as well as checking off the symmetrical landmark 410 to the downside. Now looking for a reversal, an uptrend roughly to 450. So that looks great. We're expecting upside for AMC. Today is episode 6 of the Chop series and also the finale. I fully believe that the chopping is now done and we should be uptrending all next week, heading into earnings November 8th, where we theoretically get our macro break and squeeze. So this looks great. Expecting upside for SPY next week. Nothing else to say. Perfectly symmetrical move. Perfect touch points. EMAs look great. Golden Cross happened months ago. This looks amazing. The symmetry looks amazing. SPY's macro side by side looks amazing. Perfectly synced up. The market is perfectly timed right now for the movement going forward. Fully expecting upside on SPY going forward now. And now let's get into AMC. I'm gonna try to get through this video pretty quick. So starting with the macro as always, your January equivalent in the green, your January equivalent in the green, pull back ascending W, pull back ascending W into your June run, the yellow, June run in the yellow, your V shape, and then your macro break here in the blue box. Before you break down to the downtrend, which is a descending wedge, green, red, blue, and then at the end of the blue, dropping to your flat portion, playing out the flat portion before you get your gap up, your macro break, and your squeeze. Once again, theorizing here that the flat pattern is really just a reset pattern for the algorithm. Having come through all this downtrend now, you fall down to the flat portion at the end. This is the theoretical reset pattern before you get the bull cycle. So that's what we're looking for. And once again, coming down to the most macro trend on AMC, this white trend, first bounce off here is support, second and third is support, fourth and fifth as support. Break below, reject it. Now it's resistance, another rejection here, another rejection here. The whole flat pattern, you're just rejecting this trend. So you get your gap up, your macro break here into your January squeeze, coming down to test into your June, and then playing out the macro the exact same way, all the way back down to this trend where we found a bounce off and we are now uptrending. Again, this trend is meeting zero pretty much right at the New Year's. This trend's going to be irrelevant. Once we get our macro break and squeeze, this trend will no longer be relevant. Once again, the point at which the support and resistance of the descending wedge meet is your third bottom all-time low landmark, running it from the January peak equivalent straight down, and over here same thing, January peak equivalent straight down, and then the resistance line, we're running from the top of the V, right above your macro break in the blue, straight down, and then over here same thing, the top of the V, right above your macro break, straight down, and the point at which support and resistance meet is your third bottom all-time low landmark, from which you form an uptrend. I know this is blurry, but you form an uptrend, you get that choppy pullback. January 15th is right here, and this gap up is your macro break, and that is where we are. The third bottom all-time low landmark, the point at which support and resistance meet, the uptrend, and then the pullback, the chop now. That's it. Macro looks amazing as always. Nothing really else to say here. Moving on, getting into the actual flat portion itself now, which is now 12 days away from being 1-to-1. And again, I'm theorizing here that this pattern, this flat pattern that I've been tracking since I've been on YouTube, since day one on YouTube, been tracking this, theorizing that this is more or less just a reset pattern for the algorithm heading into a bull cycle. Right before your macro break here, this gap up, this pattern takes you into the new cycle, the squeeze, which is what we're looking for now. But really quickly going over this again. So January 2021 cycle on the left, this is coming down to your first bottom, very choppy here, gap up, double peak move, down to your second bottom, which is a higher low on the daily. Over here, same thing, coming down to your first bottom, very choppy, gap up, double peak move, coming down to your second bottom, a higher low on the daily, gapping up again from your second bottom into the tri-peak, 3 pokes above that trend in yellow on both sides, and then the knife down to your third bottom all-time low landmark, from which you form an uptrend. You get that pullback, that chop zone. January 15th is the end of the macro, gap up right there, that's your macro break, straight line into your squeeze. That's where we are now, third bottom all-time low, the uptrend, the pullback, choppy. Just look at this, just look at that. Very, very choppy, very sideways price action, exactly what we want to see. Once again, we are now 12 days away. We're on day 330 of 342 of the flat portion, with day 342 ending up lining up on earnings, November 8th. So 342 days, 2021 cycle from the beginning of the flat portion to your peak, and in the current cycle from the beginning to where we are today, 330 days, 12 days away now, with that 12th day being November 8th earnings. This looks amazing. Now zooming into this a little bit more, the third bottom all-time low landmark, coming down to your third bottom all-time low landmark on both sides. You get that cup in the cup up, the green circle on both sides, the pullback, very choppy W, pullback, very choppy W, the reclaim in the yellow, the reclaim in the yellow, and then the rest of the move up to the top where you reject, you come down, and you get this chop zone, which is where we are. We've been here for the past 2 weeks. Very boring price action, very sideways, choppy price action, but just chopping around here sideways, and here we are today. So we already checked off most of the landmarks here. As a matter of fact, we are at the end of this now looking for January 15th. Your double bottom here, your double top, your double bottom, your double top. The 1070 move, we didn't quite get. We didn't get the wick up. It is a pretty drastic wick. I mean, the body of the candle ends right here. And this is just a crazy ass wick up. We never actually checked that off over here on this side, but we did pull back and start ascending here. So ascending peaks, ascending bottoms here, ascending peaks, ascending bottoms here. We are now in January 15th, and I am expecting this uptrend to play out over the course of the next week and a half leading up to earnings. All of this is now done. The whole cup down, the rejection coming down, the chop zone is all done. All of this is now complete. We are now looking for this move here, January 15th, the uptrend to $13, $14, which will conclude our macro. Which will start next Monday. Next Monday, we should be uptrending. All Monday through Friday should just be uptrend. I'll get into that in a little bit. But Monday through Friday, uptrend. I think Monday and Tuesday of the following week, heading into earnings November 8th, which is Wednesday. So this looks great. No complaints here whatsoever. Chopping, the chop is chopping. Chop episode and the finale, episode 7 today, and the finale. We're done here. Time to move up. It's time to get out of this range and start moving to the upside. That is that. Now getting to the symmetry. Here's another perspective. And what we're looking at here is the previous iteration right underneath us that played out. The cup here. This is that $7 range, your third bottom all-time low. Found that pop off, and then the pullback, very sideways, choppy price action, a very symmetrical move before you break out, retest, and then you got that bull run. So we're looking for the exact same thing now. Here's the current iteration of it. Here's the top of the move, 1118, pulling back, very choppy, sideways price action, symmetrical, looks great. The breakout, the retest, very dragged out retest. This took pretty much all week, but we are now looking for this move here. Landmark-wise, the symmetry, we would be sitting right here right now. Right here at the end, and now looking for the upside out of this, having broke this trend. This looks amazing. No complaints. Again, we're expecting upside here. We're expecting uptrend all next week. Monday through Friday, uptrend, and the following week, Monday, Tuesday, heading into earnings, potentially where we peak on day 342 of 342 of the flat portion being 1-to-1. Getting into the final iteration now. So the W we're looking at. And we're looking at here, I said this in my last video, so a lot of repetitive stuff. You know, it's another update video. Nothing has changed. It's just one more candle of price action on the charts. It's very repetitive, but I'm going to go over it anyway. So we're looking at the final iteration here, the January 2021 cycle, the W with the tri-peak in the middle, which took you into your squeeze compared to the current iteration. Once again, this is very skewed because of how drastic the third bottom all-time low was, which I've covered multiple times, the reasons why, filling all the open gaps to the downside on the daily, checking off the all-time low landmark. We met with Abe at the penny after hours going into the conversion. This was always going to happen. It is tracking perfectly. It's just a very drastic third bottom all-time low. So we're looking at this W here with the tri-peak that took you into your squeeze compared to this W over here with the tri-peak that is now about to take us into our squeeze. So side by side now, here it is, the January iteration 2021 on the left, running a trend line from the top over your first peak of your tri-peak straight down. And then on this side, the same exact thing from the top over your first peak of the tri-peak straight down. The other side of this line here is financial freedom. This is your macro break trend of AMC. The other side of this trend line is our squeeze. So here we are. You know, this is your January 15th candle right here. This gap up is your macro break. That is your squeeze. We are there. And look at this. Look at this daily formation. Not even mentioning the fact that this is a beautiful inverse head and shoulders here. Left shoulder, head, and the right shoulder is now forming, which it should. I mentioned multiple times the V, the macro V is inverse head and shoulders. That's what we're looking for, and it's forming perfectly. Just look at the daily candles here. Just nothing but red, but just completely sideways, holding this range, chopping up and down. This trend line here, the break of this trend will be taking us into our squeeze. This trend is very, very important. This is our macro break trend of AMC, and we are sitting right up against it right now. This looks fucking amazing. Genuinely, this looks amazing. Moving on from that, just showing it again with the EMAs, just the 20 EMA, but just showing you where the 20 EMA meets the price action at this chop zone here is where we are. So your third bottom all-time low, the uptrend out of it, the rejection chopping here and fighting for the 20 EMA. Also where you meet this trend, break that trend is your squeeze on the other side. That's where we are. Here's the trend, straight down over the first peak of the tri-peak. Perfect touch there. Perfect rejection off that bull run that we got 2 weeks ago. And now we are pressed up against the resistance right now. This looks amazing, and fighting, battling for the 20 EMA. This had to have been beginning of August. I said on the way down here, eventually the price action was going to meet the 20 EMA, and we would chop here, battling for the 20 EMA before we gap up over it into our squeeze, our macro break. Here we are, and here is the trend. This looks fucking amazing. Moving on from that, every single day is January 15th for AMC. And I'm going to go over this again. On the left, this chart over here on the left is a 1 minute chart. This is January 15th, a 1 minute chart on the left versus AMC's macro, a weekly time frame, 3 years of price action on the right. So 1 day versus 3 years on the right. I mentioned every day is January 15th. It is. This pattern plays out on every single time frame from the 1 second to the 1 month to give you the macro here. This pattern, try to explain that again. This pattern is playing out. These are weekly candles, is playing out in every single one of these weekly candles on every single time frame to give you the big picture of AMC, the macro perspective here. So again, really quickly running through this, W here in the yellow into your January squeeze, W here in the yellow into your January squeeze, pullback, ascending W, pullback, ascending W into your June squeeze on both sides, the flag, and then your downtrend. 4 touches, 4 ejections on the top of that trend. 1, 2, 3, 4. 1, 2, 3, 4. Halted every single time we touched this trend, by the way. And then the knife into the V. So the knife into the V, which again is an inverse head and shoulders. There it is. Coming back up to this yellow trend is the end of the macro. That's what we're looking for next week, is the uptrend back to $14, which will complete January 15th, complete the macro, and then from there, looking for our macro break, which more than likely will be lining up with earnings. On some crazy news, because theoretically, we should be gapping up over the entire range. So when you get your micro fractal break here on the 1 minute chart, you gap up over the entire range. We're looking for the macro fractal break, which theoretically would be an overnight gap up over the entire range, meaning gapping up overnight to 400 plus and heading for my price target of $1,400 per share on AMC, which is the 3.618 fib. And there's another price target, just based off the Fibonacci spiral, which is $2,600, which I definitely could play. I will be out of everything by $1,400. Personally, not financial advice. Nothing I ever say is financial advice. But I will be out of everything by $1,400. Do not hold for 100K, not financial advice. That's that. Now just getting into this zoomed. Here it is. So 1 minute chart on the left once again, and the weekly, the macro 3 years of price action on the right. Here's your 4 rejections up top. Here's your 4 rejections up top. Your 3 bottoms descending, 3 bottoms descending. From the third bottom, form an uptrend here, reject, higher low, reject again. Third bottom, uptrend, reject, form a higher low, reject again. Knife, and then play out the V. Just waiting for a weekly candle to come up to $14 to complete the V, which completes the inverse head and shoulders and checks off January 15th. And then we're looking for our gap up. Again, this is lining up for November 8th earnings. That's that. Now, really quickly, RSI OBV volume update. We'll start with the macro trend. So this is a weekly perspective of AMC, your January equivalent, your June equivalent, V-shape, descending wedge. Macro break, January equivalent, June equivalent, V-shape, the wedge. And then we are at the end of the macro once again. Getting into the volume now, this wedge decreasing volume all the way through it until the end of it, where volume starts to pick up into your squeeze, all-time high volume, pull back into the January, pull back into the June squeeze, lower volume there, and just descending volume all the way through the macro, all the way through the wedge, until the end of the wedge where we broke out, coming down for the retest. We are now at those all-time high volume levels. Heading into the next macro, what this is telling me is the volume on the next squeeze that we get is going to be through the fucking roof, which makes sense as my price target's $1,400 and a conservative price target at that. Once again, the green volume here from $400 all-time high on AMC to $7 all-time low on AMC. The green volume here has outweighed the red all the way through the macro. Every green spike you see here is outweighing the red all the way through the macro. This looks amazing. Having said that, OBV is at all-time high levels. Increasing OBV is a great sign for AMC and price action going forward. So relatively flat here until AMC became a meme play. Legs up in January, legs up in June again, and then from $400 down to $7, pretty much just hovering right around all-time high levels. There was a descending trend here in red. We broke out of it, retested, bounced off, and there is your new all-time high on OBV. Cooled off last week, and this week picked up a little bit more. This looks great. I'm expecting this to leg up again, probably in a pretty big way. As the price action, when we squeeze, the OBV is more than likely going to be legging up in a big way. And the RSI on the weekly is still oversold, just completely flatlined here at 30. RSI has pretty much just flatlined down here at 30. There is plenty of room on the weekly RSI to the upside. And this looks great. Back-to-back red weeks, but low volume and pretty much sideways in the range. I can show it here. So here was the run up to $11 and the pullback, the chop zone, which we should be doing right now. So perfect tracking, perfect price action, back-to-back red weeks, just straight chop here, low volume pullback and holding up. This looks amazing. And one last thing before I go, this is a projection for next week, or the next week and a half, in my opinion. Daily chart. So here again is the macro V, which is an inverse head and shoulders. So here's your left shoulder, your head right here, and now forming, in the process of forming the right shoulder. Again, we're playing out the exact same iteration that we played out underneath us. Yes, it looks like a descending triangle, and no, this is not bearish. When you do break out and retest, you get that bull run, which was roughly 7 days. 1, 2, 3, 4, 5, 6, 7 days bouncing off into the bull run here. 7 days, 7 trading days takes us to November 7th, with the next day being November 8th earnings, which this price action would complete the V. This would be your right shoulder now formed, completing the V, coming up to this touch point at $13, $14, which is this line right here, which is what we're looking for. I can show it side by side. Right here. We're looking for a weekly candle, this weekly candle right here. This is what we're looking for up to this trend on this side now, which I'm assuming we're going to be getting over the next week and a half. Looking for that $13, $14 mark, which this is my projection for it. Inverse head and shoulders, the macro V, $13, $14, completing the V, checking off the rest of the tracking January 15th, and then heading into earnings November 8th, which is 1-to-1 with the flat portion. And we're looking for our macro break and a squeeze. Once again, my price target is $1,400 US, which is a conservative price target per share. That is a conservative price target, and I'll be out of all my positions before that. No questions asked. Not even going to think about it. That's just me. Not financial advice. Nothing I ever say is financial advice. I think you guys should know that by now. And that's pretty much it for the video. 25 minutes in. Dragged it out a little bit, probably with the Star Wars intro, the Stomp Wars. But today's price action, it looks amazing. SPY checking off the final symmetrical landmark to the downside here at 410. as you saw over here. We are now looking for upside on SPY, which is perfect because we're looking for upside on AMC next week. I am expecting next week is going to be pretty green. So that looks great. The side-by-side macros looks amazing, checking off the final down spike, final landmark to the downside. AMC's macro is perfect as always. Nothing really to say there. 12 more days is 1-to-1 for the flat portion, with day 12 landing on November 8th earnings. The movement just looks fucking incredible. You know, this looks amazing. It looks absolutely perfect. Up to the trend. Third bottom all-time low, third bottom all-time low. Up to the trend, reject, chopping, reject, chopping. Now looking for the January 15th move here, which theoretically will take us all next week. So that looks good. The symmetry of this, the iteration that we just played out underneath us, looks amazing. Playing out the exact same way. Broke out this week, retested pretty much all week. Now looking for the climb out, the other side of the cup. Again, that's taking us to $13, $14. This is the most important trend line on AMC right now, right here. This trend line is the most important trend line for AMC. Here's your inverse head and shoulders. The other side of this line is our macro break. And you could really see how we're getting pinched down here, just straight red candles, but sideways, chopping up and down, holding the range and pressing up against this resistance. The break out of this trend will be taking us into our squeeze. So that looks good. That's it. Every day is January 15th. 1 minute chart versus the macro, 3 years of price action. Exact same fucking thing. Looking for our macro break into our squeeze, gapping up past all-time highs overnight, which likely will be on earnings. Who the fuck knows? Maybe earnings is the pounce. Maybe we're gonna be getting some wild, crazy fucking news on earnings. The pounce that Adam Aaron was talking about, whoever, I don't even fucking remember when, but maybe earnings, Q3 earnings for AMC is the pounce because everything is fucking lining up. This looks amazing. I'm expecting green all next week for AMC, and more than likely SPY as well will be climbing to the upside all next week. That's it. I could really, you know, I could go over so much other shit, but I don't want to sit here and talk for 3 hours. GameStop's macro looks amazing. Ethereum Classic, which pretty much is AMC, same chart, is ready to fucking take off. Ethereum Classic is ready to moon. Everything looks amazing. Everything is lining up. No complaints whatsoever. Honestly, I loved this week's price action. Yes, it was boring as fuck, but we should be chopping. We should be chopping up and down sideways here. Today is episode 7 of the Chop series and the finale. It's time to fucking move up. It's time to break out of this range, and it's time to fucking squeeze. That's it. Enjoy your weekend, guys. I'll catch you with some updates next week. Potentially alive. If things start getting crazy, yeah, I might be alive next week. So, that being said, I'm out.